So the model we're going to be looking at today is ICT's unicorn trading model. It's something that is used by quite a few trading groups that I've seen that have shared this, and so I think it's something you guys could definitely learn and backtest and see if it delivers the results that you want over large enough sample sizes. And yeah, I'll kind of get into everything that is. So basically, for today at least, we're going to be testing this on the 5-minute time frame for ES. I see it most commonly used for indices during New York session. I'm sure it could work on other pairs and timeframes as well, but that's going to work on today. And there's a few kind of core concepts we need to go over first. So the first concept is a breaker. And for those of you that are unfamiliar, this is essentially a failed order block. So you might have heard me talk before, kind of the last maybe last green candle before a reversal to the downside, there would be like a order block up here. And once price basically invalidates that order block, the term that ICT uses is a breaker. And so kind of in these images here, you can kind of see kind of where these breakers would be highlighted. And we'll go through some examples as well. I actually have on the chart here. You can kind of see here on this move down, this last kind of cluster of green candles was an order block until price pushed up through it. And then this would kind of then flip to be a breaker. So it can be multiple candles. It doesn't have to be a single candle. And then fair value gaps, hopefully most of you guys are familiar with those, but essentially it is kind of a gap in price between three candles so that the wicks before and after a candle basically don't overlap. And these can also act as kind of supports and resistances, as price is kind of coming back to retest them. So let me know if any questions on those concepts, but the unicorn model basically is going to be looking for instances where there's a market structure shift with both a breaker and a fair value gap. So kind of two potential reasons that price could hold up before it continues. We're also going to be looking at draws on liquidity today. So for our kind of targets or for our directional bias, we're going to be looking for relative equal lows or relative equal highs. That oftentimes retail will place kind of obvious stop losses up here, assuming, okay, it bounced off this level so many times, so it shouldn't on the next time. But often this is what will be used by institutions and larger players for liquidity, so they can kind of stop out the retail before kind of making their reversal move. So we're going to be looking for equal lows and equal highs for our kind of draws on liquidity. And then secondly, after we have our draw on liquidity, we're essentially looking for certain price formations. So if we're looking for a bullish reversal, we want price to be coming down here to basically sweep the local lows and then shift up to the high, creating both a breaker and a fair value gap that need to be overlapping. That's going to be key. They have to be kind of overlapping each other. And then our entry is essentially going to be on a retest of these kind of breaker and fair value gaps and expecting continuation to the upside. Vice versa, for a kind of bearish reversal, say the price is trending to the upside, we need to see certain structure where price takes out the local liquidity, makes a higher high, and then reverses to the downside with displacement, creating an overlapping bearish breaker and bearish fair value gap that we'll use for a kind of entry for a short. So let me know if there's any questions on those, but we're going to be going through a bunch of examples and hopefully it'll make more sense. For today, for simplicity, we're just going to be using kind of the retest, the first retest of the kind of overlapping breaker and fair value gap. This is definitely something that you have the opportunity to optimize, and I've got some ideas down below for things you can optimize, but I've seen a lot of different ways that people trade this. Maybe they prefer entering at the fair value gap or kind of where they overlap. Maybe that's where they want to enter. And then same thing with stop loss. You can kind of get a bit more aggressive and put your stop loss kind of right on the other side of these kind of fair value gaps and breakers. But for today, I'm going to be using kind of the low or high of the manipulation leg. And to get us a little better stop loss, I'm going to use the body instead of the wick extreme. And then take profit levels for this strategy. Most people that I see, they'll generally draw a kind of fib retracement with a kind of simple standard deviation measurement of the this manipulation leg here, and then they'll project out kind of 2 standard deviations above that or below it, vice versa, and that'll be kind of their primary take profit, or you could hold it longer to the draw on liquidity. So we'll kind of use those today, and then we're not going to trade if it's right on red folder news. And again, for today, I'm not going to do trade management. We're just going to kind of let it play out to our take profit or stop loss, and maybe over time with optimizations you can play around with a bunch of things. So like I mentioned, optimizations, there's a lot of things you can kind of play around with. The strategy, if you use the body of the kind of higher low or the other side of the fair value gap or breaker. The entry, you can also kind of play around with a few different things, kind of on the first test where it overlaps or the fair value gap. And then take profit considerations, do we need to consider a specific R? Does it need to be at least 2R, 3R, etc.? Does the 2 standard deviation projection need to be before our draw on liquidity? That would probably be a good rule in my mind. And then, is there any kind of partial trims or anything that would be helpful for this strategy, or does a trailing stop loss? So these are all things that you can kind of consider over time as you're testing the strategy to really fine tune it and optimize based on the pair you're trading, the time frame, and large enough sample size. I do think kind of these two in particular are probably helpful, where the 2 standard deviations needs to be before the draw on liquidity, and with most strategies the trailing stop loss would be beneficial, but maybe not in this case. We'll have to kind of see how it plays out. So let me know if there's any questions on the kind of model overview. I'll go ahead and link this in the chat for you guys as well, so you guys can have this, and I'll share it when I share the recording as well, so you guys can reference that while we're going through things. And let's dive into it. So I've got a second session created here for ES on the 5-minute time frame. Let's go ahead and jump into it. I've already set up a kind of new layout for this strategy. Remember, pretty much every time you make a new backtesting session, you want to make a unique layout so that all your drawings and everything save. And let's see, indicators wise, we only need a few things. I've got this kind of New York session indicator, and I'm probably gonna just have it go from basically New York open to close, because that's where we're going to be closing the trades. And then I will probably add the fair value gap indicator by FX replay, so that we can see our fair value gaps that are created. And let's go ahead and get started. So we're starting New York session just shortly here, and I can already see there's pretty clear relative equal highs right here. So this will probably be our draw on liquidity for the day. So let's go to kind of the start of New York session. I want to make sure this is on 5 minutes. So we got about 30 minutes until the start of New York session. Make sure this is playing on the right time frame. All right. So we have our kind of price structure that we need for a bullish reversal here. If you guys remember, we have a lower low followed by a shift to the upside. So right here, we formed a lower low, kind of swept this local low, and now we are pushing a bit higher. So I'm going to mark out this green candle breaker here. So right here, this is our breaker. And then let's see where this next candle closes if we don't have an overlapping fair value gap yet. Okay, and now, since we've made a lower low here, I'm going to adjust the breaker to basically be this last green candle we had right here. So basically the last green candle before we manipulate it to the downside. So we have a breaker there. Let's see if we displace to the upside. Okay, now we have moved to the upside. And sorry, I'm going to move this out of my screen a little bit. We have displacement to the upside. We have a tiny fair value gap, but I'll go ahead and kind of mark that out. So we have an overlapping breaker and fair value gap here. So pretty simple. Like I said, entry will be at kind of the test of the breaker, and I'm gonna use the body of our manipulation leg for the stop loss. And we can do our standard deviation projection if we want. So from this manipulation leg, our kind of 2 standard deviations is up here. I think it's pretty in line with our, I guess, to get 2R for us, we're going to need to get this draw on liquidity for this. So for this trade, I'm not going to worry about cutting early at this kind of 2R. I'm going to ride this one out to our draw on liquidity. So I'm going to be using 1%. It's pretty standard what I'll do when I'm testing these. I'll do kind of 100K balance, 1% of initial balance, just so that after I test over a large sample size, I can compare kind of the same P&L, in 1 month versus kind of the first few months. So that's generally what I'll do, is kind of 1% of initial balance. We've got a buy limit here at the breaker retest, and let's see how this one plays out. No trade management, so we can kind of just let this one ride out. Nice. So this is probably not how they're all going to work, but really nice start to the session. We had, like I'd mentioned, just to review, we had a sweep to the downside followed by displacement to the upside. We entered on our retest of the kind of top breaker in this case, and we targeted our draw on liquidity for a nice easy win on this day. I haven't seen too much documentation in terms of if people will trade kind of multiple trades per day on this, but I think for today, if there's kind of one trade, that's mostly what I'm going to be focused on each day. Because yeah, it does kind of get choppier in the afternoons. So let's see if we have any clear draws on liquidity. Would probably argue that this one has already been tagged. We had kind of relative equal highs from the previous day that were tagged overnight. Hey Linda, I'm going to be posting the recording in the recordings channel, which is actually just above this, but it'll need to get processed by our video team, so it'll probably be either later this week or early next week. So yeah, I would say this draw on liquidity, we can't really use it because it's already been taken, but we do have actually relative equal highs from these two. So we could potentially mark these as a draw on liquidity. However, we have not gotten our lower low here that we need yet, so if it moved straight up there, that wouldn't be valid. But trying to see, I guess looking back, the best draw on liquidity to the downside would be these kind of two lows right here. So I think price is likely to kind of trend to one of these, but we don't have a manipulation leg for either a long or a short yet. So let's see kind of how this plays out. So we do have a lower low here. Let's see if we get any displacement to the upside. If not, we might just need to wait a little bit. All right, so we got a sweep of those lows, and again, there wasn't really entry long here, but we still have this valid draw on liquidity to the upside. So let's see if we get our kind of formation that we need for this, or this might just be kind of a trending day. Yeah, so this specific day, not really anything that we can necessarily do in terms of the unicorn model. I think, you could potentially argue there was a tiny manipulation leg up here, but we don't really have any bearish fair value gaps that could have overlapped any breakers, so even using this model, there wouldn't have been a short or a long on this day. Let's go to the next session. See where we can map out our draws on liquidity. We still have this one from a few days ago. Are there any to the downside that we can watch for? We do have these two lows right here. So we have relative equal lows right here. You can kind of see both of these are pretty close to each other. Otherwise, it's pretty much just like a trend line liquidity. But I would say these are two relative equal lows that could be a nice draw on liquidity. We have had a lower or a higher high right here that could be a manipulation leg, but we need to see displacement to the downside first. All right. So no displacement either way as of yet. We did take out that high. Let's see if we get any displacement to the downside. This might also be a non-trade day. Yeah, so it looks like we basically trended into this upward draw on liquidity, but since the low was kind of made overnight in this case, we didn't really have a good solid entry for this one. So personally, probably wouldn't have been a trade day on this one either. And we're pretty much at the end of the day, so we'll go to the next session. I've already cheated on this one and marked out a couple of things. I'll remove these so we can see them fresh in real time. All right, so let's play this one forward. Let me make sure I'm at New York Open. Okay, I am. All right, so we have relative equal highs up here from kind of early New York session now. that is likely to act as a draw on liquidity. And let's see if we get kind of our formation of a local sweep followed by displacement shift to the upside. All right, we need a lower low. We've got our lower low. And we have a shift, kind of a shift to the upside. Okay, so I would say we've got a breaker right here. This last green candle basically before the move down. And we have closed above it. And do we have a fair value gap that overlaps it yet? That's the one thing that I'm not seeing yet. We have a fair value gap just below it, but mechanically, according to the rules, they have to be overlapping. So as of right now, there's not an overlapping breaker and fair value gap for us to use for this yet. All right, we have a fair value gap now. So we have our unicorn model conditions, and now I guess really all I need to see is a closure above this breaker, and then we should be good to enter on a retest. So we've got a closure above. I'm going to go ahead and place an entry right on the breaker here. Let's see, that is a pretty broad stop loss for this one. So let's see what our manipulation projection shows us. We still got the 2 is before the draw on liquidity, but I think in practice, since we have formed kind of higher lows here, I'm going to go ahead and use the body of kind of this recent low instead of all the way down here at this manipulation leg. And the reason for that is I think if we use this low, we wouldn't even have, it'd be like a 1.4R. Not really even necessarily worth going for this one. So I think I'm going to tighten this one up to the body of these lows and try and give us a little bit better of a risk to reward. And so we're going to enter at the retest. We got 1%, buy limit. And oh shoot, this is the end of the day. Sorry guys, I got excited about this, but this is, or no, we've got a couple hours left, sorry. I'm used to Denver time, and 14 is after close, but we still have a couple hours left for New York session, so let's go ahead and play this on. We entered, and it hits our TP just before the close of the day. So really nice trade on this day. We've got 3.3R trade, and so to review again, we had a manipulation leg to the downside, followed by displacement to the upside with a nice breaker here. We did have to wait until there was an overlapping fair value gap with the breaker, but then basically once price closed above those, we entered on the retest and targeted out our draw on liquidity up here. So yeah, nice trade. Going to the next day, not really any downside. We don't have relative equal lows, it's just kind of a single low here. We have relative equal lows all the way down here, which might not come into play for a while, but that's like a pretty clear draw on liquidity, these relative equal lows over here. Let's see if we get a bearish reversal criteria. So we have no fair value gaps yet. We have a sweep of the highs, followed by a shift to the downside, so I think this is probably going to be valid. So I'm going to highlight these 2 red candles here, kind of the last red candles before the manipulation leg. So this is our breaker, and then we have a fair value gap that overlines with this, followed by a market structure shift to the downside. So I'm going to be placing the entry at kind of the breaker here. I'm going to use the body of the manipulation leg. Let's go ahead and measure out the 2R standard deviation, or 2 standard deviations. Looks like it's taking you about to this low here. And when I was going through materials with people going over the model, they say a lot of times you'll get kind of pullbacks after the 2 standard deviations. So that's something that we'll have to kind of see over time. Is it better to just TP there or potentially hold to your bigger draws on liquidity? I mean, the draw on liquidity is way down here. This would be an insane trade. So I guess technically we have some relative equal lows here, but I think I might just go with this this 2 standard deviations one today, since the draw on liquidity is so far away. I think that's a bit too ambitious for this one, so we'll just go for a 1.6R trade in this example. So we'll do a sell limit, and we'll see how this one plays out. Okay, so we have our first loss. So yeah, we pretty much disrespected both the breaker and the fair value gap, and went to the upside. I'm assuming one of the reasons for that is we have these New York highs from the previous day. It wasn't relative equal highs, but in terms of manipulation and grabbing liquidity, that's probably a reason that price was drawn here before giving us our reversal. So let's see. I'll play it a little bit longer to see if we get kind of a second entry. We do have a slightly higher high here and a fair value gap that overlaps with our breaker. So I'll actually give this one a second shot. So I'm going to zoom in so you guys can see a little bit better. We do have a slightly higher high here for our kind of manipulation leg. Our breaker is this red candle is the one I need to grab. So these two red candles before the manipulation leg. We also have an overlapping fair value gap. And so we'll try to do a second short on this one, entering on the breaker retest, stop at the body, and let's project out our 2 standard deviations. It's going to be pretty quick on this one because this was a pretty small move. So I think in this case, I'm going to target out these relative equal lows that we mentioned a little bit earlier, which also line up with kind of this, I guess, daily low as well. So let's see if we can target out 5.4R in this trade. Let's go for it. So sell limits, let's see what happens. Got tagged in, and unfortunately, it's too aggressive with my take profit. So as I mentioned, we can see here it hit our 2 standard deviations, and that's where the reversal took place. So one thing that, again, you have to kind of see large enough sample size to really decide like how to make these moves. You can't make these decisions after like 3-4 trades. You have to really see how it trends over more trades. But one potential thing we could do is either take partial profits at this 2R standard deviation. I think this one, it would have only been like 1.3R, so not really worth full TP at that point, but potentially at least putting stops to break even after that kind of 2 standard deviation is tagged might have saved us from a loss today at least. But overall, like, I'm happy to kind of take these. We had our draws, we had our shifts, and we'll kind of take the trades. And we did eventually get the reversal, but it's happened in London session overnight, unfortunately, a little bit later than we were trading during New York. So we're having a bit of consolidation. I don't anticipate we're going to do much until we sweep this draw on liquidity to the downside. So let's see if we can get a push up here for a reversal to the downside, or if we just go straight to our draw on liquidity. Yeah, continuation day. We had kind of a manipulation leg to the previous day, and now move to the downside. Let me see if there's a potential trade I missed here. So we did have a higher high here. I believe we did, yeah. So I'm gonna come back and probably record this one. So if I look back here, and I'll zoom in so you guys can see this, we had a slightly higher high here, which is kind of a local manipulation leg. The last red candle before that is right here. So this is our breaker that we had. And then our fair value gap, we had 2 of them, but this is kind of the main one that overlapped right here. So probably what I would do is I'm going to go back and record this one, and we pretty much basically tagged right into this one when market opens. So this would have been a valid short according to the model. So for simplicity, today I'm just using kind of the first fair value gap or breaker of the overlapping. It's kind of as my entry. And then I'm going to use the body of the manipulation leg for my stop. Let me see where my draw on liquidity is down here. And it's obviously going to be a good ways before our two standard deviations. So yeah, let's go ahead and record this one because this would be valid for the unicorn model. We had a sweep of these highs, a shift to the downside with overlapping breaker and fair value gap. We enter on the retest and go towards our draw on liquidity, these relative equal lows over here. So let's place this order. So limit. And nice win. So I think I might have actually recorded this one before New York opened. We should have had like 4.47. Yeah, that's right. Okay, we recorded it right. So yeah, nice win on the day. And stop me at any point if any of these concepts, if you're like, how did you see that draw on liquidity, or what else? I do want to actually show you guys a trailing stop loss that I actually use, because this trade would have been a monster if you'd used it. So this is something I'm gonna show you guys when I share the optimization video. But there's a concept called price weighting, which basically helps you hold your winners longer. And basically all it is after your trade hits the take profit, your first trailing stop loss is the candle before the candle that hit your target. So you can see this kind of 950 candle hit our target. So I'm going to start my trail the candle before it. And then basically every new low that gets created, I'm going to do the same thing. So after we took out this kind of low right here, I'm going to trail my stop loss to the previous candle. And then we kind of trail down here to the downside. And again, once we break this low right here, I'm going to trail my stop to the candle before the candle that makes the new low. And then, let's see, this is probably one that I would have used. So we have a low here. I'll zoom in so you guys can see this. We came up just a little bit and made a lower low. So I would trail my stop loss to the candle before the candle that makes the lower low. And I finally would have got it stopped out here for like 9R. So in this case, this trailing stop loss would have doubled your profits on this trade. And it's something that you have to test over large enough sample sizes. There's going to be trade, like especially if you're targeting liquidity, there's going to be a lot of times where it just tags the liquidity and then that's it. But for a lot of models I've seen, these kind of trailing stop losses really help. There's a lot of ways you can do it. This is just kind of one of the ways that I use it. Other ways that you could consider trailing stop losses, sorry, let me remove these, are based on market structure. So as long as we're continuing to make lower lows and lower highs with closures, then we can kind of continue trading it. I would probably say right here, you have a higher high that's closed. So if you're just trailing based on market structure closures, then you'd probably close the trade here. But there's a lot of ways to do trailing stop loss. You could also do like a fixed 1R stop loss. So, potentially after 5.68R, it would come back on you on like 4.68. Or if you're doing like a 2R trailing stop loss, you can kind of play around with these. And it is something that can improve your profits quite a bit if you can implement it into your trading strategies. But enough with that. Let's get back to testing the unicorn model. Linda asks, do I take partial profits? For today, I'm not doing any trade management at all. I'm pretty much just letting it run to my draw on liquidity. But I did make a consideration after we saw kind of this trade from the previous day that one potential way to execute this model that could be worth it is after it hits that 2 standard deviations from your manipulation leg, maybe you at least go stops to break even at that point. To protect yourself from kind of reversals at that point. But you do also have to be careful with that, because a lot of models will kind of come back to break even and then go to your take profit. And even if more often than not it is the right thing to do, if you give up those winners, it might not. So it's something you just have to check over time. But for today, just keep things simple. I'm not doing any trade management. We're pretty much just entering at our levels and using kind of a reasonable take profit, whether that's the draw on liquidity or kind of the 2 standard deviations. Let's see. So we just took out these relative equal lows down here, so can't really use those anymore. Try to see, we have relative equal highs right here. So this high and the London high, we have relative equal highs, so that's going to be our draw on liquidity. Not sure if we're going to catch a trade here. This is a pretty big manipulation leg that's already well above the breaker. So we had our price movement here. We made a manipulation leg and we've shifted to the upside. So now I'm seeing if I can hop in on a retest basically after New York Open. So this last green candle is our breaker. And do we have overlapping fair value gaps? I don't think this fair value gap overlaps quite. So if you're being like true to a T to the unicorn model, I don't think this one will count. They're very close. Actually, yeah, I would count this. It's the same dollar value. So I would probably say this is fine for a retest. Our manipulation leg was kind of this move here, and the 2 standard deviations is a little bit above our draw on liquidity, but not too much. It's not like crazy higher. So let's see after New York Open. We do have this news that we have to be aware of. It's PMI, which usually isn't too bad, but let's see if we can get a trade here. So if I use the manipulation low here, this is not even a 1-hour trade. So either you could not record this trade and just say this isn't like a good enough risk to reward for this trade, or for this example, maybe we'll try this one with a slightly tighter stop loss that's kind of just below the breaker. And again, I'm gonna leave the optimizations and things for you guys for this, because I think you need to spend the time and figure out kind of the best way for you and like for whatever you're trading. But I think I probably wouldn't take this trade with the stop loss way down here. It's not even like 1-to-1. So either I would pass on this trade or maybe try a tighter stop loss. We'll see if we can do the tighter stop loss on this time. Go back to 5 minutes, and if it hasn't tagged in before news, oh wow, that was awesome. So if you guys can see, it literally tagged us in and went directly to the TP, which is the best trades that ever exist. Just goes straight to your TP. And yeah, that was a super quick win. So overall, I'm pretty happy with how this is going so far. We only have a few trades so far, but we're up 10% in a week or two with this model. So I can see why a lot of people trade this, because it definitely seems like it's promising if you can properly identify the draws and liquidity. So let's see where our draws and liquidity are now. I would probably call these lows relatively equal lows for a draw on liquidity to the downside. So let's see if we get our unicorn set up here. All right, let's see if we get a fair value gap. We did not get a fair value gap. Now we have one. So we have our manipulation leg to the upside. We have a breaker, which will be, let's see, this highest, yeah, this red candle before the manipulation leg. Right here, and we have an overlapping fair value gap right here. So let's see if we get a retest for continuation to our draw on liquidity. So this would be a 1.7. It's not bad. We've had some bigger ones before, so I think I'd be happy to take this one. Let's do our standard deviation projection real quick. So the 2 standard deviations is before our draw on liquidity, so seems like a valid trade to take. Let's see if we can catch a retest on a short here. All right, we did not get tagged in on this one. It went without us, and that happens sometimes. You can't catch every trade with every model, but we had to wait for the fair value gap to get created here. If there had been a fair value gap created on this previous candle, we might have been able to enter previously, but unfortunately there was no retest back up here, so this is just a trade that we weren't able to catch. And yeah, I don't really see. We do now have relative equal highs here from these levels, so there could be a move back to the upside to catch these, but I don't know if we'll get it today. Let's kind of play this out a little bit. Yeah, not today. Let's see if we can get it tomorrow though. I'm gonna draw this back a little bit. All right. No major relative equal lows that I'm seeing, other than these ones that are really close, but that's kind of too close to where the price is. So I think our primary draw on liquidity is these previous highs up here. Let's see if we get our kind of unicorn reversal price action for shorts. Right now we're manipulating to the upside. And again, I guess I'm not sure we'll see it. Yeah, we do still have these relative equal lows here, but it's pretty close to this breaker. I don't think this is probably a trade that we would take just because it wouldn't be that much risk to reward. Just drawing it kind of right here, it'd be like a 0.85. Let me see if maybe this is a trade we could take to the 2 standard deviations at least. What would that give us? Still only a 1.3. So I'm getting ahead of myself, but just to show you guys what I'm looking at, we did have a manipulation to the high. There's a breaker here, and we have overlapping fair value gaps. But since our drawn liquidity is like so close, this probably isn't a trade that I would take just because the risk to reward's not that good. I'd rather maybe see us sweep these lows and then see if we can get a reversal to kind of back to the highs. But I'm not seeing any kind of better draws and liquidities. This is just generally kind of trendline liquidity right here, which is also like good. Like you want to see this if you're shorting, but for our kind of primary profit target being equal lows, I'm not really seeing any. Maybe these guys back here, if I'm seeing this right. So we have relative equal lows right here. Let's try and play off of these. So we did have relative equal lows right here. I could definitely see price reversing after these initial ones are taken, but let's see if we can catch this trade. It's worth at least giving it a shot. So we have a breaker here. We have an overlapping fair value gap. And let's go ahead and give it a shot. We'll enter on the retest, stop at the kind of high of the body, and let's go ahead and target out these lower relative equal lows for almost 2R. And just see how it plays out. So we got tagged in, and it was a loss. So as I suspected, we swept the kind of clear relative equal lows, and that's where we got our reversal. I don't think we would have been able to catch a long here. Let me just review real quick. Breaker would have been here. Fair value, yeah, there weren't any retests on the way. So this is probably definitely one that I would have gone break even with my stops after these relative equal lows were swept, because there was a good chance that would kind of be our manipulation leg before we saw some upside. But again, we're kind of playing around and seeing how this model works, and happy to show you guys kind of wins and losses and talk through kind of why price reversed here. Like this was the primary draw on liquidity, but I needed a better target to give us a little bit better. The only other way that I would have potentially taken this trade is using kind of a tighter stop loss next to our basically next to our breaker, like just above it. And I think in that case we could have gotten like 1.9R. So again, probably something to review in optimizations if you have multiple draws in liquidity, kind of when to use the high versus a tighter stop loss. I think if it's not, maybe at least 1.5R or something, then you can kind of play around. Is it worth using the tighter stop loss in those cases or all the times? But I personally probably wouldn't have taken this trade for like 0.84. Like it's not even 1R. So I think, again, we could play around with it, and potentially you could have got 1.9R with this one if you did a tight stop loss on this kind of first retest. But I went for this lower level and a more conservative stop, and it was a loss. So we'll just leave that as is and kind of factor it in. And the nice thing when you do these back tests is over time you'll kind of start to see certain patterns, and when you go back through an audit, you'll kind of have defined, okay, I actually want to be consistent taking my stop loss here, my take profit here, and let me make sure I recorded all the trades in that manner, and then that's when you can kind of run the optimizations off that. But for the first run through today, I'm just kind of showing you guys kind of my best guess on kind of how someone would trade this model, and happy to chat more in the backtesting chat if you guys have like specific examples you want feedback on or anything like that. But probably just gonna chop around until the end of the day, see a couple more examples, and then we'll take a look at the analytics. So let me see if we have any relative equal lows. Not really. So we still have these highs that are untapped. If we move to the upside, not really seeing any relative equal lows. These are kind of close. but yeah, not really any clear downside liquidity that I'm seeing. This is like, again, it's close, but not really clear in my mind. So I think I'm going to be looking for a shift to the upside. Unfortunately, we didn't get a lower low here. So this doesn't meet the unicorn criteria. We have to see our manipulation leg make a lower low before a shift. So since this was a higher low, we can't count this as a potential entry. So we're going to continue to let it play out. Now we have our lower low. And we didn't quite form the unicorn again. Down here at the bottom, if we would have had a manipulation leg take out this low before our shift up, then I would have considered looking for an entry. But it looks like it just kind of tagged this fair value gap from this previous impulsive move up, and that's kind of what we bounced off of. So again, not really clear relative equal lows here. You could potentially say that this kind of cluster of lows is kind of close enough, but I'm looking for, like, almost not to the dollar, but levels that are a lot more obvious. Like when we were looking at these yesterday, like these lows are, you can almost draw the line across and it tags all of them. So that's kind of more what my eye is drawn towards. But again, over time, if there's more cases where it's playing out in this way by kind of these lows that are maybe within, what's the price measurement on this? This is like a 0.1%. So if you have lows that are like within that range, maybe that's something you can target over time. But I wouldn't classify these as like relative equal lows the same way we've classified the other ones that we're using, for example. So probably no trades for this day, unfortunately, even though it had a nice price action. So we have relative equal highs now from kind of this previous day New York high and London high, and I would probably say these are close enough for relative equal lows. Let's see, we have a slight manipulation leg followed by displacement to the downside and overlapping order block and fair value gap. So I believe this would be valid for unicorn retest. So we have our breaker here. I'm making sure I drew that correctly. This basically last red candle before the move up, and then we have an overlapping fair value gap. So entry for this will simply be the test of the breaker, stop at the body up here, and let's go ahead and target out these lows. But the 2 standard deviation is going to be it's already tagged the 2 standard deviations. So this is potentially another thing that I would maybe make a note when testing this model. If you haven't gotten tagged in before it hits the 2 standard deviations, maybe you pass on those trades. That's like another thing to take into consideration, because there's often reversals here, and you'd rather kind of already be in on the move when that's gotten tagged. But just for today, we'll go ahead and see what happens if we would have taken this one. It might not even tag us in. Yeah, didn't even tag us in. So wouldn't have been a trade we could have caught with this specific model. I think if you were using like a liquidity sweep and there's like an engulfing candle here, maybe you enter off that right at market open or something. That's really the only way you could have caught this move, but there was no retest for the unicorn model, so no trade on this day. So we'll do maybe 1 or 2 more examples, and then we'll take a look at analytics and any kind of last Q&A. And delete this. Go to next session. Oh. Alright, I'm just going to confirm that I didn't miss a entry this previous day. We had a slightly high here. Let's see, I do believe that I missed a trade right here. So as I'm looking at this, we have a relative equal highs that I'd kind of drawn up here. We have, it's pretty slight, but I'll zoom in so you guys can see it. We have a, where's my drawing tool right here? We have a high here, followed by a lower high for a manipulation leg, and then displacement to the upside. So this does fit our bullish reversal, we have a lower, kind of a manipulation leg lower and then a shift to the upside. So I'm going to go ahead and kind of come back here and re-record this one just so we make sure to capture it for our analytics. All right, so we have our breaker here, this last green candle before these shifts, and then we have an overlapping fair value gap right here. So since we've gotten a closure above this previous high, that's kind of our market structure shift. I'll enter on the retest, stop at the body of the manipulation leg, and we'll target out our draw on liquidity up here. You can do the standard deviation measurements from the manipulation leg, and it's kind of about the midway point roughly. So this is probably a trade that we should capture for the analytics because it is valid unicorn model. Let me just make sure that it's finished before the end of the day. Yeah, the end of the day was quite a bit later, so nice win to end the backtesting session. So again, this isn't something I saw like at first, but the nice thing with backtesting is you can go back and record the trades that maybe you missed the first time through, and especially when you're going back and auditing, there's going to be trades you missed as well, so it's just helpful to kind of review and make sure that you caught them. But as we saw here, there was a pullback after this 2 standard deviations hit, but the fair value gap held it up and it continued to the upside. So let's go ahead and take a look at our analytics. I honestly feel pretty good about this strategy from the limited backtesting that we had with it. So we did 8 trades. We had a 62.5% win rate. I didn't do any trade management whatsoever. I think we had that one trade that kind of went to our initial liquidity level and then came back on us. Average of 3.03R, which is honestly pretty great. And there were definitely some trades that we could have done a trailing stop loss. So if you see these ideal and max RR average like pretty high, that definitely indicates that you could definitely potentially trail the stops a little bit longer. But yeah, I think this is definitely a strategy worth backtesting. It's something that I actually might play around with a little bit more myself. So hope you guys found this helpful. Again, I do think this is definitely a strategy worth backtesting for this pair in this time frame. And yeah, we'll talk to you later. Hope you guys enjoyed.